and welcome to Moneycontrol. You're currently tuned into the IPO corner. I'm your host Nichi Mirchandani, and today our focus will be on Pyramid Technoplast, which is the fourth public issue this month after SPFC Finance, Concord Biotech and TVS Supply Chain Solutions. Now, this industrial packaging company Pyramid Technoplast is set to hit primary markets with its initial public offering on August 18th. The maiden public issue of around 92.2 lakh equity share comprises of fresh issue of around 91.3 crore and an OFS of around 61.7 crore by promoter Credence Financial Consultancy. Now, but before this, let's understand more about the company. The company produces polymer-based molded products, that's polymer drums, which are primarily used for packaging needs by chemical, agrochemical, specialty chemical, and pharmaceutical firms. It also manufactures MS drums made of mild steel used in the packaging and transport of chemicals, agrochemicals, and specialty chemicals. With 6 strategically situated manufacturing units, the Gujarat-based company markets and sells its products under the brand name Pyramid. Its 7th manufacturing unit is under construction at Bharuch, adjacent to the existing 6 units. Let's talk about the price band. Well, the IPO price band has been fixed in the range of 151 to 166 per equity share of the face value of 10 rupees each. The anchor book, a part of qualified institutional buyers, will open a day on August 17. Well, let's talk about the important dates out there. Pyramid, like I suggested, opens a subscription on August 18. It closes on August 22nd, and the basis of allotment of shares will be finalized on August 25th. The company will initiate refunds on August 28th, and the shares will be credited to demat account of allottees on August 29th. Now, the shares are likely to be listed on the exchanges by August 30th. Well, let's talk about the reservations in that case, where IPO has reserved 30% of the shares for the QIBs, 20% for the non-institutional investor, and 50% of the offer is reserved for retail investors. In terms of lot size, the IPO lot size is 90 equity share and in multiples thereafter. In terms of retail investor, they can make a minimum investment of around 14,940 per share, which is 90 shares, and the maximum investment can go up to 1.94 lakhs for 13 lots. High net worth individual with an investment limit of around 2 to 10 lakhs in the IPO can make an application for a minimum of 2.09 lakhs for 14 lots, and the maximum investment can go up to 9.86 lakhs for 66 lots out there. Let's understand the objective of this issue. The fresh issue proceeds, excluding the IPO expenses, will be utilized for repaying certain borrowings to an extent of 40 odd crore and a working capital requirements to an extent of 40.2 odd crore. The total borrowings on its book stood at around 55 crore as at the end of March FY 2023, down from 64.8 crore in the previous financial year. This means that with the fresh issue, the debt to equity ratio is expected to improve from 0.52 at the end of March to 0.86 in August. An important parameter that we need to speak about is the financial performance of the company, where the revenue of FY23 stood at around 480 crore, increased by nearly 20% from the previous year. On the operating front, EBITDA grew by 18% to a number of less than 50 odd crore, but margins, however, have dropped by 10 basis points to a number of 10.4% in the previous financial year. Now, return on equity, they have also fallen significantly to a number of 29.6% in FY23, down from 34.77% in the previous financial year gone by. Well, let's talk about ROCEs. They've remained stable during the same period at 21.4% against 21.4% that we've seen in FY22 for that matter. Let's talk about the valuation, the PE of the company. The company with a PE of 16.2 times on FY23 basis compares itself with the listed entities such as Technoplast with a PE of 14.16 times, TPL Plus Tech to an extent of 20.5 times, and Moltech Packaging of 41.1 times. Let's talk about the risk factors. A couple of factors out there. The first one is the manufacturing operation in Western India, which is Bharuch, Gujarat, and Silvassa, Dadra, and Nagar Haveli could face disruptions due to regional factors. Possible factors include political unrest, natural disaster, civil disturbance, and protest for that matter. Second one, a substantial chunk of its revenue comes from the manufacturing of polymer-based molded industrial packaging products. Now do remember that polymer is derivative of a crude oil, and any substantial increase in the price of crude oil or decrease thereafter in the supply of polymer could materially adversely affect the business profile of the company. Third reason is the company has not entered into any long-term agreements with the customers for purchasing its products. Fourth reason, the company has reported negative cash flows in the past and may continue to do so in the future as per the RHP. Fifth, any ban on the polymer-based packaging by the government of India also may affect its business. Well, with this, it's a wrap. Thank you so much for tuning in.